Welcome back, everyone. As earnings season continues to roll on, crushing the tech industry, one major company yet to report is Apple. So let's take a deeper dive into what we may see after the bell today when the tech giant releases its fiscal fourth quarter numbers. Bloomberg projecting revenue of more than $88 billion and earnings per share to come in at $1.26 here. Of course, this is still a business that relies so much on that demand for the iPhone. We've kind of heard from some of the telecoms players that if people are spending continuously with them, they're spending higher into higher price plans, and that could potentially mean good news for Apple as well if you read through that. But we'll see exactly where those numbers come in at given the iPhone 14, the pricing strategy, and for some of those other products as well, wearables and services is what I'm going to be watching.
Strange setup here, I would say, for Apple. On the one hand, excuse me, they obviously don't have that advertising business as a Snap, Facebook, and a Google that hammered those results.
No, and they're the source of the troubles.
Right, yes, especially with Snap, you're exactly right. But then we saw PC weakness by a lot of, we've been seeing increasingly PC weakness from a lot of companies right now. So how is that playing out in Apple? I will say this, by and large, the street is expecting or positioned for Apple to beat not just a little bit on earnings, but potentially be big, owing to a stronger gross profit margin and lower operating expenses and momentum on the iPhone 14. So anything that smells of a disappointment, you could be selling, very easily see a sell-off in Apple.
So a couple thoughts on Apple here. After we had Meta yesterday, there was this sort of narrative emerging that Apple was going to be the savior of the earnings season, right? Coming out because Apple has been such a solid and consistent performer. So there's a lot riding on Apple, and it's not just about the company stock. It's sort of about salvaging tech earnings, exceptions like ServiceNow notwithstanding. A lot of the large cap tech earnings have indeed been lousy. A couple other things to mention here. Obviously, as we showed the various components, revenue sources for the company, and the iPhone is still the behemoth here. The number two area now is indeed services, as the company has been pushing for now for several years. So the estimate there of $19.97 billion. So that's going to be closely watched as well. We've talked a lot recently about Apple Music. We talked a lot about it in the office. Apple versus Spotify. Now that Spotify may be raising its prices, and we're going to talk about Spotify in a second. So that's something to watch as well. The third thing that I've been watching is the stock performance. It is down more than 16% year to date. If it does finish the year with that kind of a decline, and obviously we have some time left, it'll be the worst year since 2008 for Apple, with that sort of 17% decline. In fact, if it declines more than 7% or so, it'll be the worst year since 2008, which again illustrates just how consistent a performer it has been. If you go back to 2008, there were only 2 other years that were down years since then for Apple shares.
Yeah.
So a lot.
Because, in this type of environment, I will just add this. It's very good to have a steady hand in Tim Cook, former CEO of the company, understands operations, has pretty much seen every cycle over at Apple. Apple may report a disappointing quarter, but still, just having him at the helm still, I think is very important.
I think what he also understood that has clearly driven the culture at Apple now, too, as much as we talk about your phone connection and your device being a necessity, he's also understood that there are little luxuries that you can layer on top of that necessity, and that is services. And that's what's going to build them out to being a $80 billion run rate business within services alone this year.
Says the Apple Music guy.